Evening, everyone. So we are present here to present our presentation regarding project which is titled Corporate Financing Decision Making and Framework for the Woolworths Group. So I would like to introduce you to my group members. We have got Virender Sharma. We have got Jasandeep Kaur, Joyson Almeida, and myself Samip Khadka. We are Group 7. And without any further ado, I would like to start the presentation. So the first topic so the first slide will be regarding the introduction of our project. So regarding the introduction, we are going to examine four of the things about the Woolworths Group. That will be goal. What will be the goal for their, like for their company, and what will be like the context, like on which context we are going to present our presentation, and the challenges, like what are the challenges they are going to face in the market, and what are the things that need to look for in the future, and the roadmap. Like roadmap will determine all of the things that we are going to do regarding the hurdles or the obstacles like the marketing, the all the instability and everything that the Woolworth is going to face. So that's our introduction part. And for the second part, I will like Birendra Sharma to to take it forward.
Now that we have introduced the scope, let's look at the exact purpose and structure of our report. Our report has four main purposes. First, the business overview. We assessed Woolworths financial year 2024 financial performance, governance, and market position. Second, the identification of issues. We explored both internal factors like supply chain efficiency and external ones such as economical and regulatory pressures. Third, the development of a framework. We based our design on stakeholder value, ESG considerations, and corporate finance theory using NPV, WACC, and dividend policy models. Finally, the objective to use rigorous financial planning to generate strategies that create sustainable value for both shareholders and stakeholders. To achieve that, we need a sound and credible methodology, and that's what we discuss the next. Now it's time for methodology. Our financial theory component railed on capital budgeting tools such as NPV and IRR using WACC as the discount rate. We also incorporated the pecking order and the trade-off theories to determine funding choices and applied dividend theories like crescent efficient for payout stability. For a stakeholder perspective, we integrated ESG metrics and value-based management compensation like EVA and MVA to balance profit and accountability. Our data sources included Woolworths Financial Year 2024 Annual Report, H1 2025 Financials, and Capital News outlets such as Reuters and Morningstar. Finally, our method combined quantitative financial analysis with qualitative insights from market trends and stakeholder expectations. Using this methodology, we analyze the main financial and strategic factors like influencing Woolworths. Now it's time for analysis of factors and trends. Our analysis uncovers several critical themes. Under the macro environment, high level expenses and inflation remain a burden despite broader economic stability. Customers are trading down to cheaper home brand products, though sales rose and about 7% last year. Consumer conduct is cautious. People are price sensitive and quick to compare discounts. In terms of competition, Coles control 28% of grocery markets while Woolworths hold 36%. But is losing share as Coles grow faster and online rivals like LG and Amazon Fresh expand. Internal challenges include the 17-day strike that cost a 240 million in sales and forced a dividend cut from 47 to 39 cents. Lastly, ESG and regulations. Australia will soon enforce ASB S1 S2 climate disclosure rules, increasing reporting cost and reputation. In short, Woolworths must stay stable profitably while adapting to changing consumer behavior and tightening ESG obligations. For Jason.
Our framework combines four financial pillars. First, capital budgeting with NPV focus. All projects must clear a positive NPV using Woolworth. WACC as the hurdle rate, prioritizing long-term gains like automation over short-term profit spikes. Secondly, financing strategy based on trade-off theory, maintain prudent leverage. balancing flexibility and tax advantages, and perform stress tests for debt sustainability. Third, dividend and cash policy commit to steady payouts to sustain investor confidence while keeping room for uh, fourth, risk and stakeholders integration fold ESG and non-financial risk into valuations by adjusting hurdle rates and measure value using EVA and MVA. We also include an illustrate investment, for example, treating selective price reductions as an investment in consumer trust whole NPV can be modeled just like any capital project. We prove five key recommendations: rebuild consumer value and trust through competitive pricing and simplifying everyday rewards offers. This could recover the share the price of sensitive customers. Secondly, it enhances supply chain resilience by upgrading warehouses and automating DCs to cut stock outs and cost. Also, secure long term labor agreements to prevent strikes. Thirdly, it accelerates digital omission growth, expand online grocery capacity, and rewards using data analyst. Fourth one, it strengthens ESG and governance, adopt upcoming AASB S1 and S2 climate disclosure rules and expand ethical sourcing and community initiatives. Fifth one is that it optimizes financial policies, set clear dividend guidelines and NVPR ROI criteria so only high return projects proceed together. These actions align financial discipline with customer and social value.
Implementation implementation plan. This roadmap breaks our strategy into three streams with measurable KPIs: rebuild customer trust, apply price cuts on 500 crore items, and monitor NPS. Same store sales and market shares, budget $100 million for promotions with a manageable margin impact. It strengthens supply chain and automatic distribution centers and optimize inventory management. KPIs include on shelf availability and fulfillment cost per order. It's $150 million with delay risks. Digital and sustainability upgrades e-commerce systems and begins ASAP. Compliance in e-commerce penetration and ESG ratings budgets around $80 million. This phased approach ensures accountability, realistic budgeting, and continuous tracking of performance. Finally, let's wrap up with our key conclusions. Can you please change to next slide? On conclusion, we would summarize that Woolworths operates in a high pressure environment marketed by inflation, competition, and rising ECG requirements. Our purpose corporate finance framework provides the discipline needed to preserve and grow shareholder wealth. The core idea is simple: combine strict NPV based investment, screening with a balanced funding, mix and responsible dividends. Key actions such as customer value program, supply chain automation, digital expansion, and ECG integration, which directly addresses the issue we identified. As a result, Woolworths can maintain profitability, regain market momentum, and enhance trust with both investors and customers. In essence, by adopting this disciplined financial procedures, the company can maximize long-term value and sustainability. So, so the reference and closing, all information presented today was sourced from credible references, including Woolworths Group 2024 annual reports, Morningstar's, The Guardian, and the Reserve Bank of Australia. That concludes our presentation. Thank you so much for listening.